Well, to talk more about the prospects for the euro and what the year ahead holds for investors, alongside me is Richard Jeffrey. He's Chief Investment Officer at Cazenove Capital Management. Thank you so much for coming in. What is it holding? Because we're fearing also now the core of Europe, France, possibly being downgraded. Does this have an impact on how you see the markets developing?
Well, it certainly is going to have an impact, and it's not entirely clear just how deep this financial and banking malaise is going to go within Europe. And while there is that lack of clarity, of course, there's going to be downwards pressure on the euro. Even though some parts of Europe, particularly Northern Europe, Germany, are doing very well, that is not, I don't think, going to be enough to counteract the negative effect from the Southern European economies.
But, Richard, in terms of what we're seeing, if it gets any worse, are we actually going to see a breakup of the euro? We've been talking about it, and it's been dismissed. But actually, if things are going from bad to worse, what is the end game?
Well, I think if you look at the economics and financial situation at the moment, the euro is no longer viable. It's being propped up by political will, and I think there will remain that very strong political will to keep the euro going through this crisis. I don't think they'll want to see it destroyed by the first crisis within Europe. But in the longer term, yes, the euro will break up. It won't survive, but it's not necessarily predictable the exact moment that fracture actually occurs.
What does it mean for your investment strategy? We were just speaking with Mark and Linda about the fact that actually after a crisis, there's a lot of M&A out there, and we are seeing pressure on banks, but actually stocks overall doing quite well.
Well, I think the first thing you have to take into account is there is still a lot of risk around. We obviously have been through the early stage of economic recovery around the world. That appears to have been very brisk. Obviously, it was driven by inventory recovery initially, some capital investment coming through, but there are still quite big question marks hanging over some of the bigger economies. And for instance, when we look at the United States, the recovery is occurring there, but is it going to lose momentum or gain momentum next year? That's a big uncertainty.
But Richard, it's questions that we've asked ourselves over the last 8 months, and then you look at the equities, and they've, the DAX has gone more than 10%. A lot of these equities have gained so much. Will they continue this trend?
Well, a lot of equities have gone a long way. The equities, if you like, at the leading edge of the recovery, they're some of the higher risk equities as well. And it may well be that in the coming year there's some reorientation in equity markets, and people begin to move a little bit away from risk and move more back towards defensiveness. And I think one of the key issues for financial markets this year is going to be when they start to focus on the possibility of interest rates rising. We've been through a long period in which interest rates have been exceptionally low and exceptionally stable, and that isn't going to persist forever. And I think by the time we get to the middle of 2011, we will start to see thoughts beginning to move towards rising interest rates. They might even have started going up in some areas, probably not by then, but the thoughts will be moving that way. And that will cause a reassessment of its exposure to risk.
Yeah, Richard, thank you so much. Interesting stuff. Richard Jeffrey there.